Institutional Bitcoin meets the yen carry trade. Flint West reporting. Luke Gromen is right, but not for the reason people think. Warren Buffett is right, and for the exact same reason. And Saylor is going to need a bigger United States dollar boat. And to all crypto enthusiasts, it is going to get bumpy. Because what is happening right now is not about narratives. It is not about quantum computing. It is not about Bitcoin being broken. It is about macro. Bitcoin does not exist in a vacuum anymore. And that is the part many people have not fully internalized yet. Bitcoin adoption has always moved in cohorts. First it was Satoshi, then the cypherpunks, then the dark web, then early technologists, then retail speculation. The dominant cohort dictates Bitcoin's behavior. In 2017 and 2021, Bitcoin was largely retail-driven. Momentum, narrative, reflexivity. But in 2025, something changed. The dominant cohort is now institutional, and institutions do not trade narratives. They trade balance sheets, they trade funding costs, they trade macro linkages, which means Bitcoin now inherits institutional vulnerabilities. Luke Gromen selling some Bitcoin is not about fear. It is not about quantum risk. It is about exposure management. Because when institutions enter an asset, that asset becomes collateral. And collateral is subject to funding stress. And that brings us to Japan. For decades, the yen carry trade was the quiet engine behind global risk appetite. Borrow cheap in Japan, convert yen into dollars, buy higher yielding assets elsewhere, stocks, credit, real estate, and now Bitcoin. But that trade only works when borrowing is cheap. It is not cheap anymore. The Japanese government bond market is moving. And not slowly. The 10-year yield has surged from near zero to above 2%. The 20-year yield has pushed toward 3%. The 30-year yield is north of 3.4%. These are not small moves. These are regime shifts. And the charts are screaming. Borrowing costs have exploded. Hedging costs have exploded. Currency risk has exploded. The hurdle rate for the carry trade is now punitive. When that happens, institutions unwind. Not because they want to, because they have to. And when institutions unwind, they sell what they can sell first. Bitcoin trades 24/7. Bitcoin is liquid. Bitcoin moves first. That does not mean Bitcoin is broken. It means Bitcoin is early. Bitcoin is the canary. What follows is equities. The NASDAQ, the Magnificent Seven, tech. We have seen this movie before. The yen carry trade is not small. Depending on estimates, it sits somewhere between $4 trillion and $20 trillion. Even a partial unwind matters. We already saw a violent reversal last year, and the damage was not isolated. Crypto fell, stocks fell, volatility spiked. This is how deleveraging works. Now look at Warren Buffett. Record cash, absolutely enormous cash. Why? Because the stock market is historically overvalued relative to the real economy. The Buffett indicator sits deep in extreme territory, 2 times gross domestic product. That is not a timing tool. That is a warning light. Buffett is not bearish. He is patient. He understands mean reversion. He understands liquidity cycles. He understands that when funding tightens, prices fall. Buffett is waiting for forced sellers, just like Gromen is managing exposure. Same conclusion. Different assets, same macro logic. And this is where the warning comes in. Bitcoin is no longer just a retail dream. It is now embedded in the global macro plumbing. That is bullish long-term, but brutal short-term. Institutional Bitcoin means institutional volatility. It means Bitcoin trades like a risk asset when liquidity tightens. It means Bitcoin rallies hardest when liquidity floods. And it means Bitcoin sells first when leverage comes out. Macro always collects. So if Bitcoin is under pressure, do not ask what is wrong with Bitcoin. Ask what is happening with funding. Ask what is happening with rates. Ask what is happening in Japan. Because this is not about belief. It is about balance sheets. Luke Gromen is right. Warren Buffett is right. And Saylor is going to need a bigger United States dollar boat. And to all crypto enthusiasts, fasten your seatbelt. This is what maturation feels like. Flint West signing off.